Hello, everyone. Thank you for attending today. We're going to take a minute or so here before we get started. Got a couple people who are logging on here momentarily, and then we'll jump into this. Okay. Couple quick things. On the right-hand side is the chat. Certainly feel free to offer up any questions that you have there. And also we have the handout section there. So if you want to take a look at the PDF there for the download, that would be great. We'll take a look and before we jump in, okay? Okay, let's get started. Let's jump right into it. So today we're going to talk a little about cash balance plans. We do these as sort of general info webinars, but specifically today I wanted to talk a little bit more too about a special topic, which is really your timelines, your deadlines for funding. We do have a specific slide on that, but we're going to kind of cover that in a little bit more detail. We're getting close to the deadline here, and so it's very important that people make it a point to kind of schedule out some tax planning here with their CPAs as we get close to the end of the year to make sure they don't run out of time. Okay. We're going to have a quick introduction. We're going to talk a little bit about what the cash balance plans are, talk a little bit about pros and cons. I'll go through those slides pretty quickly. Talk also about who is a good candidate, and some of the cash balance plan strategies that we actually implement. And then we'll have a special topic, which again is we'll talk a little bit more about the timeline and then a Q&A. As we're going through this, if you come up with questions, you are welcome to send off the questions to me. I can answer them as we go, and we can make this thing. Usually we try to do it in about 20 minutes or so and offer a few minutes for questions. But again, I wanted to talk very specifically about the timelines and the deadlines for setting up these plans, okay? Just a little bit of background information about me. I think many people are already aware of this. I am a CPA, 30 years of experience with setting up these plans for 10, 15 years with a lot of my clients. My specialty is, of course, retirement structuring, comprehensive tax planning, and entity structuring. At Empyrean, we do provide all retirement structuring for including cash balance plans, SOL, 401ks, other types of defined benefit plan structures. We do all the third-party administration and compliance. We are not financial advisors and do not do tax returns. Our goal is to help you structure the plan, to help coordinate with CPAs and financial advisors. The ultimate goal is to lower your tax bill and get a little bit more money into retirement, okay? What is a cash balance plan? And I'll kind of jump through these, as we talk about this and difference between a cash balance and a defined benefit plan. They are IRS prescribed plans. They promise a specific benefit at retirement. This is opposed to a defined contribution plan that establishes a limit up front. Once you put the money in and contribute to that limit, then it doesn't matter what happens with the assets afterwards. A defined benefit plan assumes your asset balance and does a valuation of those at the end of the year. And typically, the big difference is going to be you use a defined contribution plan when you want to get rather smaller amounts in, let's say $10,000 to $50,000. Usually in that 20 to 30 range is kind of the sweet spot for a defined contribution plan. If you want to get $75,000, $100,000 and then some, that's when you got to go to a defined benefit plan structure. That's when that's going to make the most sense for you. Okay. So typically over 100,000 contributions is going to be where a defined benefit plan is going to fit most sense. Why do people set up these plans? Main reason is very large contributions, up to $300,000 a year. Easy way for business owners to catch up on retirement. They can be rolled over into an IRA. And you can also contribute up to the date the return is filed, which again is something we're going to talk a little bit about. And obviously they're available for not just large businesses, but even very small businesses can contribute to these plans. The advantages, we've kind of covered some of these. You can combine them with a 401k plan. You can roll them over into an IRA once you're done. You can contribute those high amounts, and you do have flexible funding. The negatives to the plans is that they are permanent in nature. They're a little bit more complex to administer and maintain. They do have mandatory contributions, and they're more expensive. So again, don't make a lot of sense a defined benefit plan structure when you're just doing, 10, 20, 30 grand a year. But when you're trying to get in, 100,000 plus, that's when they can make a lot of sense. Best candidates, again, people looking to maximize their plans, looking to maximize that tax deferred contribution, companies with consistent profits, and also companies looking to improve morale and improve employee retention, assuming you have a bunch of employees in the plan. Take a look at a few funding examples here. I'm not going to cover these in great detail. You will have access to the slides, but you can certainly see that, with different funding levels here, you can see these are driven by age, and compensation is going to be the big drivers. 401k deferrals are driven based on age. So as you get a little bit older, over 50, you can put more in, hence the 27,000. Under 50, you can do 20,500. Profit sharing on these plans will be limited to 6% of the defined contribution, of the W-2 compensation. Okay, that's opposed to a traditional 25% that you can do. So you do lose a little bit on the cash balance plan side, on the profit sharing side, but you're going to make up a lot on the deferred, on the defined contribution side of the plan. In the last example here with the 65-year-old attorney, you can see this attorney is getting a very large contribution in. That's because we use a trick, which is basically called prior service, or getting a contribution in for prior years, which allows us to get very high contributions in an initial year. And obviously you can see the tax savings here highlighted in yellow. So tax savings pretty huge on these plans. Some of the strategies here that we've got, take a look through this slide, this handout, and you can see there's a variety of strategies we can do to get a higher contribution for a plan. The deadlines, this is where we really want to talk, and this ties in next to, you can see my next slide here is the special topic, but we're basically going to address it here. Talk a little bit about the timeline and what you need to know. So you could set up the plan, thanks to tax reform recently, up to the date you file your tax return, with the latest date being September 15th. So hypothetically speaking, you could come to us on September 15th and say, I want to set up a plan. We could probably legally set you up a plan. The problem is you're not going to be able to fund that plan by the deadline, because not only do we have to open the plan, you need to get an investment account open, and you need to make contributions into that plan. Okay, so that's typically not going to make most sense for you. So what we end up doing here is we tell people, give us at least a month to open up the plan, and that way you can get your custodial accounts open, have time to process and get everything done. The contribution to the plan is the same date as the plan setup. So again, hypothetically speaking, you have up to September 15th to get this into a plan. And again, even if you are a sole proprietor where your ending date is October 15th, you actually have to fund these by September 15th. So that's going to be the deadline there for you. Okay. So you have plenty of time to do this, but as this ties into year end, even though you can set up a plan in a subsequent year for the prior year, we always advise people, and here we are heading into, we're in kind of late November here, heading into the December timeframe. We tell most people, try to make a decision by early December. And the main reason is that you want to give yourself ample time to adjust your W-2s, to make sure you don't overfund your 401ks, to discuss with your financial advisor and your CPA. So that's why we recommend that people set these plans up before you file your tax return, okay? So that's critical for a lot of people. But you do have the ability to extend that deadline if you want. So that's just something to consider. But, since I said these plans are driven by age and compensation, you want to make sure you might need that high W-2 compensation. So you might need a W-2 of, let's say, 200,000 or 300,000 in order to make the contribution you want. So you might say, I'll set up a plan later, but maybe your W-2 is only $60,000 or something. And so it makes it very, very challenging to be able to structure the plan after your deadline is in place. Again, your payroll for an S Corp has to be done by basically December 31st. You also don't want to overfund your profit sharing plan. So that's why for most people, we say the critical deadline that you want to think about is trying to get this thing done, or at least a process in place where you, your financial advisor, your administrator are all on the same page by December 31st. For that reason, we advise people to get a plan set up by December 1st, at least get the process going. Okay. I've covered the special topic there. And again, what we do is we offer a turnkey solution, free plan illustrations. We'll do all your strategy review, file your forms, and do all the actuary review. Just reach out to us. We are glad to review these plans with you and set up a game plan for getting it done. Again, the timeline's a little tight here, but certainly reach out to us if you have any questions, and we'll be glad to help you out. Again, once you get done with this slide here at the very end of the webinar, you're going to be prompted to actually go to our contact form page, which is where you can sign up for a webinar with us, sign up for a call so we can give you a custom illustration and talk to you about your situation to make sure you're in good shape and nothing's slipping through the cracks. Obviously, you've got our phone number there if you've got any questions or concerns. Again, thank you very much for joining the call today. It was a rather quick call. If you have any questions, concerns, you want to set up a plan, feel free to reach out to us and we will gladly help you out on the plan. Have a great rest of the day, and we hope to be talking to you soon.